very good for the US markets yesterday. But before we talk about that, I just want to shift your attention to what the implied open is indicating, because we seem to be penciling in a very weak start today. But compared to where we closed yesterday, we closed at 24,548. It's indicating 24,535. So at least on the basis of futures, we are indicating to be making a weak open today, a 100-point cut coming on that front. But let's focus, talk about some global news coming in and the global handover coming in from US. Now, the overnight moves come on the heels of a losing session on Wall Street. The 30 stock Dow dropped more than 230 points, or about 0.5%, falling for the sixth consecutive day and marking its longest losing streak since April. Nasdaq has also fallen nearly 0.7%. It also broke below that 20,000 mark as technology stocks as Nvidia slumped, while the S&P 500 also edged down about 0.5%. So it's a day of cuts coming in for Wall Street. For the week, if you take a look at what these indices have done, the Dow is heading for a 1.6% cut, while the S&P 500 is on pace for a slide of 0.6. The Nasdaq has outperformed the market, on track for a 0.2% advance for the period. Thursday's moves follow a producer price index report for November that came in well ahead of expectations, and wholesale prices increased a 0.4% last month, higher than the Dow Jones consensus estimates of 0.2%. So that's something that was not taken very well by the street. The recent rise in equities has fanned some concerns of an overvalued market fueled by post-election rally, but some on Wall Street also think that there may still be some more room to run. Friday marks a light day when it comes to economic data, with November import and export data out during market hours on Wall Street. If you take a look at what the 10-year Treasury yield has also done, we've seen some moves coming in across the bond market, because the 10-year Treasury yield has edged up yesterday as investors weighed a hotter than expected November wholesale inflation reading. The benchmark 10-year Treasury yield has noted more than 4.334%, up more than 6 basis points, and the 2-year Treasury was more than 4 basis points higher at 4.1999. Also, another space that we should be talking about right now is what the dollar index has done, because the dollar has advanced on the inflation print, currently at 100 and very close to 107. And you also have the euro that has dropped on the back of that 0.25% cut coming in on the rates by the ECB. So lots to watch out for in today's trade. Lastly, this is what the global handover is looking like. Very weak show coming in from the US market, Shreyansi.
Well, absolutely. And the same can be said about oil as well, because when you take a look at oil prices, you did see a fall coming in, a slight fall in fact, as the forecast for ample supply in the oil market also offset optimism stemming from rising expectations of a US interest rate cut. So that is something that we were looking at. When you take a look at Brent crude futures, downtick of just about 11 cents is what you're looking at. $73 per barrel is the kind of level that you had coming in for Brent.